Welcome everyone to another stock investment analysis on eBay. Here today we have one of our student analysts and community leaders, Nick, and this is meant to give you more insight into the technical skills that apply by professional analysts on Wall Street when it comes to determine a stock is overvalued, undervalued, or fairly priced. So with that being said, hi Nick, how are you?
Hey, Mr. Romero, doing really well. I'm Nick. I'm a sophomore at Northeastern University studying business administration with two concentrations of finance and accounting. I'm also a community leader at Romero Mentoring and equity research analyst at Romero Research.
All right, good, thank you. So what we're gonna do here as our usual process and to give the viewers more of an introduction of what exactly we're gonna be doing is first look at the situation overview of eBay. What is the market sentiment, other analysts, what they think about the stock, price target, their most recent operation performance, so that we can understand what's the situation surrounding eBay. And then from there, we can go into a little bit more of the technical skills that you've applied to come up with your own price target and recommendation. So with that, let's focus our attention here on your presentation that you put together. And here is the overview. So Nick, why don't you just help me better understand the situation with eBay, how they've done year to date, and then we can go a little bit deeper into the story of the company.
Absolutely. Well, eBay is a pretty famous company, right? And I think almost every single person around the world knows about this company. But talking about more about the business and about the financials, right? I would probably call it a cyclical story. Some people may call it a flat story just because their margins remain the same throughout a long period of time. But what eBay does, right, it basically concentrates on and keeps maintaining good relationship with their clients, right? Because eBay has its buyers and its sellers. And basically the entire operation of the business relies on their customers. Some people buy, some people sell. There are also a bidding system, right? Where people can place a bid and the bid can rise. Later on in the presentation, I put a small diagram how the business actually operates, and hopefully you guys will be able to see that. Talking more a little bit about the recent performance of the stock. Well, the stock closed at, I would probably say reported its 2020 fiscal year with a very strong and top line revenue growth. The reason for that is pretty obvious. Our society is leaning more towards online operations and online shopping, right? And that's why it helped eBay, and it still keep helping eBay to generate enough revenue and enough free cash flow. There are also some other reasons that I'll touch on later why eBay is able to generate enough free cash flow and maintain high margins comparing it to the industry averages.
Okay, well, thanks for that introduction. And this is quite interesting in terms of what you're saying here. Market share, sustained its market share from 2019 of 5.5% in the US and 3.3% globally. Now, what's the sentiment from Jefferies and UBS? I see here you've laid out price targets, but help me understand, how does Jefferies and UBS, how do they view this company?
Basically what Jefferies and UBS put on their rating of the company is neutral, right? They do not see any potential, a big upside. When I say a big upside, I mean more than 25% the stock surge, right? They see the company keep operating within the same pattern that they keep operating. And basically what they rely on mostly, they rely on their financial results, right? What they will report under their first quarter of 2021 and what they'll report going further. So they do not see and they do not highlight any potential catalysts that may move the stock up, right? That's why the rating is neutral.
Okay, interesting. Now, are they planning to innovate? Is there any type of innovation, any new type of product to improve the customer experience? Because I mean, personally, I don't go to eBay. I don't shop at eBay. I remember back in my old college days when eBay was first around, it was basically a place to buy products, right? And you would bid on those products, especially a digital auction house for multiple products. Has anything changed since then? Is there any new product or service that they might be creating that might bring in a little bit of extra growth on this company?
Well, I don't see any potential changes happening right now, but I pitched this stock half a year ago. I believe it was in September or October to one of the student clubs that I am in. And there were a lot of potential catalysts. And basically the thing was that eBay was selling one of their biggest assets called the StubHub. And eBay was on the process of detachment from PayPal, because PayPal was like primary payment method for eBay's customers, right? But the problem with this payment method, PayPal, was that there were a lot of frauds, right?
Okay.
People were losing money, people were not getting refunds, and there was the big and huge risk why eBay was losing their customers, right? Just because of this fraud. But eBay finally detached from PayPal, and now you can purchase or receive, right, the money for the certain good using different payment methods. Among them are Visa, among them MasterCard. So, and it helps eBay to avoid those frauds.
Okay, so so that's actually a good point. So they put in place systems to prevent frauds, to prevent any type of maybe identity or fraudulent transactions, where their customers feel this is a safe platform rather than a risk to them in getting, in not fulfilling the orders or getting the product that they purchase, right?
Yeah.
Okay, interesting. Now, what about your price target? So I see here you have a price target within Romero Research of $61 and with an earnings per share of $3.70. How did you come up with that price target?
Well, it's important to mention that the price target that you see here is the price target that I applied half a year ago when I was relying on those catalysts that I've mentioned right now, selling a StubHub and detaching from PayPal. This is the old price target. By that time, I don't want to be mistaken, but the stock was trading at around 49 to, it was consolidating from 49 to $53 per share.
Okay, interesting. And what is this eBay granted $100,000 part of up and running program? What is this to help small business? Tell me more about this program. Is this a new initiative that they're taking?
Well, they issued this back in, it was a year ago, back in 2020, around this time when the COVID hit, right? And people started losing their jobs. People started, losing their small businesses. And
Yeah.
eBay, it was very big catalyst for eBay, and it actually played out because I've been tracking the stock since then. What they did, they issued $500,000. It was even, they generated even more. It was up to 1 million to help small businesses. What they were doing, they were basically operating as VC funds, right? Let me call it like that, and sending this money out and deploying this money out to small businesses to help those businesses to maintain and generate at least minimum free cash flow so they can survive during this unprecedented economy and this unprecedented economic pattern.
Okay. So I guess how me personally, how I would sum up this slide, it's a cyclical story, which it's something new for me to learn, because if it's online, if it's digital, you would assume that it's a technology company, but this is probably tied more to the economic cycle because of the type of customers that go on their on eBay's platform to buy products and bid on them. Obviously, the stimulus checks definitely can improve the transaction. So it's a cyclical story. It's not growing that rapidly. Would you classify it as also as a mature company that is just generating cash flow? I mean, why would someone want to own this stock?
Yes, I would classify it as a mature company. And I want to point out that while considering this stock to buy in your portfolio, you have to look at this stock as an IT platform, right? Because there is nothing physical. They don't have storages. They don't have their trucks that would deliver goods, right? And this is more an IT company. They basically depend on their platform.
Okay.
But yes, this company is mature and they basically just keep generating money. And there are so many ways that management has to undertake, and hopefully they will announce it soon under their Q2 or Q3 before the end of the fiscal year 2021, what they plan to do to make their business not being only at one level, but to make it grow and be like this rather than just staying flat.
Okay. Okay. So a new initiative in terms of an operations plan to grow top line numbers. Okay.
Absolutely.
Okay. So let's go here through some of your slides. I'm interested to know more about this company. So on an enterprise value basis, approximately $50 billion of enterprise value. Okay. Wow. Free cash flow and free cash flow yield, 20%. This is actually good. So
Yes.
from an operating standpoint, they're efficient. It's a free cash flow generating machine, but it's not growing. What are they doing with these free cash flows? How are they rewarding investors? Do they have a dividend plan in place? Are they buying back share? What are they doing with this free cash flow accumulation? And when I look real quick, when I see here at the cash that they have on hand, approximately 1.4 billion. So what are they doing with this cash flow?
Well, I would personally call this stock as a investor happy stock, right? Shareholder happy stock, because what they do, they started paying out dividends since the last quarter of 2019, and that was another catalyst for retail investors and probably for the institutional investors to step into the stock and see how it's going to grow while the management is going to pay out the dividends to its investors. Another thing that I want to point out here is that they generate enough cash flow. Where they take this cash flow? Well, they take this cash flow from selling their assets. Now eBay is operating only with one segment rather than a year ago. It also had a StubHub. It's pretty famous. I don't think that I have to describe it, but let me know if you have any questions about it. So they sold StubHub for, I believe it was around $4 billion. What they did with this money, right? It came under their cash flow, but they added up to its shares repurchase program. You may probably ask, why would they do shares repurchase program? They can also buy new businesses, they can buy new assets and just grow their business. And just when they buy a new business, they can obtain their clients, right? And just grow their customer base and their customer top line. But there is a thing for that, right? I have my notes here, so I'll probably look down a little bit because I want to be specific.
Okay.
So there is.
No, go ahead.
So there are three important things we should consider while thinking about the shares buyback. The first one, management would like to do the shares buyback to capitalize its undervalued stock. This is the first thing. The second thing is the consolidation of ownership. And the last thing is the reduced equity financing costs.
Mm-hmm.
Well, but I believe that they do this to capitalize its undervalued position, right? To be more specific, shares repurchase can be used as a strategic device that is aimed to generate even more proceeds without having to issue new shares, right?
Wow. Okay. Interesting, huh? The fact that they sold, I was not aware that they own StubHub and they exit this business and basically sold it. So I can see why their cash flows would increase, the free cash flow just from the liquidation of that asset, and then maybe using some of the cash from there to buy back their own shares. If they're buying back their own shares, probably because there's not enough demand for their shares. You don't have that many market participants jumping over their couch saying, give me eBay stock. So the management has to create their own demand for their shares. That's a different perspective from a shareholder that you have to take into account. Now I'm looking over here at your income statement, and I see the dividend yield, the dividend payout ratio, and what they've been paying. Okay, so this is maybe one of the reasons why institutional investors may own this stock, just for the dividend payout. That's fine. I'm looking here at your EBITDA adjustment, total revenue 2020, 10.2 billion, then 11.7. I mean, it's growing not what I would like. For me personally, I like growth stocks, obviously growing double digit. I see here your margins that you listed on an EBITDA adjusted basis, 30%, 33%. I should, let me highlight this here, right? So this is their EBITDA margin on an adjusted basis in the 30s, mid 30s. And then an EBIT basis just in high 29s. Yeah, almost 30%, we can say. Okay, and then here's the revenue growth that you were suggesting on the anemic side. What is this supported by cost reduction? So they're going through a restructuring plan?
Yeah, they might go through the restructuring plan. However, it wasn't announced that clear under their 10K. But you can see here what I write under my comments that I say, I rely on different consensus, what consensus thinks, right? And what Bloomberg analysts say. So what basically they mean that while eBay adjusted operating margin could moderate up to 29 or I would even say to 32% in 2021 after exceeding the company's 30% goal in 2022, right? We believe it could return to 30 by 2022. But I personally say more optimistic about this stock, and I think it could turn to up to 33 to 34.
Wow.
Yeah.
That's significant. 33, 34, that's almost 500 basis points, 5% increase on
Yes.
this thing if you get it from there. That's significant. So if they improve margins, they have a share buyback in place, and management will, if they introduce a new operating or strategy plan to grow the top line, now you have 3 reasons why you should own the stock. Help me understand, am I correct or am I missing something?
Well, you don't miss anything. You totally understand everything correctly and that I've just said. But this stock is a little bit, I would call it biased probably, because once we jump into the comparable company analysis, you will be able to see that the margins, right, they're a way higher than the industry average. However, some people may call this stock undervalued because look at their multiples. They're trading below the industry average in this case. Then why? Why would we have such a big margins in such a low multiples? Then we can step into this stock and say, okay, so this stock is undervalued. And let's just wait till all of these thesis points that we've just listed play out and the stock will go up.
Yeah.
It was reasonable half a year ago. And a stock actually went up by 45% since that time.
Yeah. Okay. So this is interesting. Okay. So I'm looking at your comp. You're right that based on their LTM margins, gross profit, EBITDA and EBIT, it's above the industry average. Okay. So that's a good one. When you look at the multiples of the industry on a sales, EBITDA and PE basis are much higher. And if we compare PEG ratio, right, we're looking now at not just on an absolute basis, but we're comparing growth, earnings growth. The industry is paying 2 times for the growth rate of all of these peer group companies that you have listed right here, while eBay is only trading at 1 time. So that creates the possibility or the scenario for potential upside momentum on the stock on the back of PE multiple expansion. But the question then becomes, is it warranted? Is the market going to pay 2 times the earnings growth of eBay if it's not really growing as fast as an Amazon, Etsy? I mean, Walmart's already more of a mature company, Target, JD. I mean, I see the peer group that you selected here. Some of these companies are growing pretty fast. So how would you answer that one? Do you think eBay does warrant a 2 times PEG ratio on their stock?
Well, it all turns around the catalyst and the management operation system. Now, I don't see a clear management strategy. I don't think that the market will pay 2 times higher on its PEG ratio, right? Because if you'll go deeper and do like some due diligence and you'll read about this stock, you'll understand that, all right, it's probably better to wait or just hold this stock in the portfolio because it's not going to go down significantly. It doesn't have like a huge, margin of safety.
Okay.
It's just going to consolidate within one period and probably grow by 17%. But that's not what we are looking for as growth investors.
Okay. This is interesting. Yeah. So that's a piece of new piece of information to really keep in the back. Here's something else that I just realized, that I just noticed, right? When we take a look at leverage, total debt over EBITDA, they're 2.5. So they have more leverage than the industry average. So maybe the market is penalizing them for that amount of leverage, which simply means they have more debt on their balance sheet per amount of cash flow that they generate than all of their competitors. So if you're an equity holder, you have more of an inherent risk, because before you get paid a dividend, who gets paid first? Debt holders. You have your interest expense, then you pay for your taxes, then you get net income. So that might be one of the reasons why the market is not rewarding them with a 2x PEG ratio, because of the amount of leverage that they have on the balance sheet. And that probably comes from their previous acquisitions as well, right?
But they didn't acquire anything recently.
Okay. Not recently.
At least, yeah, but yeah, for a long time. But again, well, they have a high leverage under their balance sheet. But look at the amount of free cash flow, and look at the free cash flow yield that they generate.
Yeah.
So some people may understand, okay, so if they generate enough free cash flow, then they're able to pay down this debt without any questions.
Yeah.
Right. So, but to understand that, you would have to go deeper and probably do some math behind just the verbal due diligence. Right.
Okay.
Absolutely.
Okay. Interesting. Now this is your comps, president transactions on the DCF side, $72.63. So your football field, I see how you came up with your price target. So now you have a price target of $73 here on your football field. How confident are you on this $73 price target?
Well, I'm pretty much confident. It's not a big upside comparing to where the stock is trading right now. Don't want to be mistaken, but I believe that the stock is trading right now on the $60 per share. Well, we expect soon we're gonna hear and see some earnings reports, right? Because we're coming up to the end of the first quarter of 2021, and hopefully, but I'm more than sure that eBay will show good financials of their first quarter, because we're still under COVID, right? And COVID still changed people's mind. I'm talking right now about like online shopping, working, right? And they better stay safe and healthy at home and shop online. So why would eBay generate less revenue that they did previous quarter? Don't see any obstacles.
Okay. Let's take a look at the charts, because the charts will give me a little bit more indication of the direction, where things are heading. So let me pull up here our charts. Here we have our platform. Let's look at eBay. Let's map it out here. And let's zoom out. And I want to see this on a weekly time frame because it gives me a bigger picture. Okay. So on a weekly basis, it's trading almost right around all-time highs. It's pulling back today. I know there was some news on the market pulling back. Here you see the previous breakout point of resistance right around here. This is a very important point of inflection for me. If the stock closes inside or below this pivot point, we have another major inflection point right here around $47. So the stock can maybe hang around that range between $60 and $47 before we get earnings. And I know you mentioned you have a higher price target on this thing, but I do see the momentum from last year, right? This move to the upside. And right now, we had a move to the upside. It's coming down. I think we need earnings. I think the stock needs earnings. It needs new market participants to come in order to take the stock price higher. If they believe that the restructuring plan would increase margin, number one. Number two, the CEO is able to introduce a new growth strategy to increase revenue growth. That's two. And thirdly, if you're a shareholder and you just like the dividend and you're not going to sell this stock and you like the free cash flow yield, then from a value standpoint, this might be an attractive play. So those are the two scenarios I see, or reasons for why you may want to be bullish on the stock. And this will probably be case number one. Case number two, I saw recently a headline that stocks were selling off today because of higher capital gains tax. This is going to be introduced by the Biden administration. So maybe the stock continue to decline from there. So you have high leverage, right? We saw in your comps they have 2-to-1 total debt over EBITDA. So they're twice as leveraged as the industry, which means that with higher taxes, that's lower net income, less free cash flows for equity holders, and you don't want to be part of this stock, then it will probably come down. That's case number 2. So you have 2 scenarios here. And the question becomes is, 1, which one do you think is more likely to happen? And 2, for the rest of the audience, I mean, I painted you both scenarios and I gave you reasons. Maybe some reasons I'm not including. I have my own blind spots as well. But, you know, you have the information. Place your bets. Which one of those 2 scenarios, Nick, you think is more likely to happen?
Was the new capital taxes, right? I believe that there is still an opportunity for eBay to go down, right? And to go down and consolidate within this range of 43 to 60 bucks. And it can happen. Look at the historical price action. Look what happened after these stocks surged up on like so high once the COVID hit. And then there was a big drawdown of the stock. And during that drawdown, I overlooked that stock as an undervalued opportunity. But right now, right, the stock is up. Yes, there was a selling off today and yesterday, but yes, the stock has an opportunity to go down. But I strongly rely on their earnings. I believe in the stock and I believe in the financial performance of the company.
Okay.
In this quarter.
Okay. Now, obviously, risk management is very important. So from a stop loss perspective, you know, if you're someone that owns the stock from down here, then you're pretty good. But if you're buying the stock up here, you have to have your own stop limit orders in place just to prevent from further downside. So obviously look at this as a probability, whether it will go up or whether it go down. And you have to make sure that you're not exposing your portfolio to a bigger risk than what you're willing to accept. Any other final comments or thoughts, Nick?
Not really. I guess I've mentioned pretty much all I wanted,
Okay.
but the audience will have an opportunity to see my email, and feel free to reach me out with any questions you might have about eBay, and I'll be more than happy to answer them.
All right, good. Thank you. So again, for our viewers, this is meant to be education, show you a little bit more of the research, the analysis, the technical skills that go on behind the scenes when we're coming up with price targets and really evaluating the stock. So this is also what our students are learning in our analyst program and also growing community. So I hope you found value in this. I hope you enjoyed it. And with that being said, thank you for watching, and I'll see you in the next one. Take care.